Hey everyone, this is Rob Keens with goldsilverpros.com. It is Sunday, March 21st, 2021. And today I'm just going to do a recap of what's going on in the gold and silver markets. The previous week and a half, I've been focusing a little bit more on gold because we had so much attention in February and early March on what was going on with silver, the silver squeeze, and the movement of silver across the different markets, that I wanted to focus on gold. And today we're going to go back again to silver. And we're going to talk about all of the silver redemptions that are going on. And then we're going to cover a little bit of gold as well. That way we're going to cover both in this report. So let's go ahead and get started with the data. It's been really interesting what has happened to both gold and silver on the COMEX and in the ETFs. And I've been showing this chart quite a bit. This is the on Gold Charts R Us, Nick Laird's site, the silver depository. So all the silver either moving into or out of a depository really shows you the physical side of the market, because what we don't see in the futures market, which helps to determine the futures price, and usually is very close to the overall spot price, we don't see in that paper market what's going on beneath the surface, what's actually happening with the physical silver itself. So I wanted to spend a moment talking about that. You can see that there has been some redemption. So we saw a buildup of silver last year and early this year, and now people are starting to withdraw, and entities like the banks are starting to withdraw their silver out of the system. Here's a 4-week change chart, or column, if you will, over here on the right, and you can see that COMEX lost 25 million total ounces of silver. 9 million came out of registered and 16 million came out of eligible. So this tells me that this amount, almost 10 million ounces, was redeemed in futures contracts and then actually came out of the overall market, and about an additional 16 million ounces came out of the eligible, which is the private storage. It's not really used in the futures trade, could be used in the futures trade, but it's really glorified personal storage or storage for large entities on the COMEX. Another 16 million ounces came out. If we also look at what came out of the ETFs, you can see there were 23 million ounces taken out of SLV, and there were a couple 100,000 ounces taken out of some others. Now, there were some additional money put into Sprott PSLV, which I want to highlight here. We go right across here, the Sprott line. We've been talking about, if you're going to put money into an ETF or a fund, should you put it into SLV or Sprott or some other? A lot of us feel more comfortable in the industry with Sprott because it's more of a closed-ended fund. We have more trust over Sprott and this organization, that they actually have the silver they say they have, that it's being audited, that you have more rights to actually redeem the silver based upon their prospectus. All of this is factually true. So there seems to be more comfort there. So you're seeing people move silver off of that SLV perhaps and putting some of it into these other funds, the ETF securities fund, the Sprott fund. Over here, the bullion vault is getting some as well. So people have gotten really smart about where they're storing their silver, because if you look at SLV's prospectus, there aren't a lot of protections for people that hold shares. And it's not easy to redeem shares unless you have a lot of shares for the actual silver itself. So if you actually want to be able to get access to your stored silver, Sprott seems to be a better way to go. And some of these other funds could be a better way to go as well. Again, I'm not a registered financial advisor, so I'm not trying to help you make an actual financial decision. I'm just looking at the data and providing the data as we see it, as well as giving you my opinion on what I trust personally and what I see in the markets. So a lot of overall 35 million ounces the last 4 weeks being redeemed from either the COMEX and the futures exchange or the ETFs overall being taken out. Some of it being put back in, 10 million ounces into Sprott and maybe some other trusted funds, but overall a net, people want to get access to silver. So the question really is the silver squeeze working? From a physical perspective, I would say yes, because we've had a lot of silver come out into private hands over the last 4 weeks. And we're going to explore this a little bit more. I wanted to get into another really cool chart, and we're going to focus right here on the COMEX, the futures market. This is an interesting chart because you can see we peaked here at about 400 million ounces of silver when you're adding the eligible and the registered categories. Now, it can be a little bit of a confusing to add eligible and registered, because this light green, this eligible stocks, is privately owned silver, but it's sitting in the warehouse. The dark green is what's actually available for the futures trade. You can see that had increased all the way up to about late February of this year. And then as we started getting closer to March, about the first week before March and then into March, there have been a lot of redemptions. You can see here just on the most recent data for the chart, it was a redemption of 6 million ounces of silver total off of the COMEX into private hands, off of their exchange. And you can see it's about, I want to say 50 million in the registered category, well, registered and eligible together since about, I want to say the beginning of February. So about 50 million total ounces have come out since the beginning of February. That's quite a bit. So if you go back here, this tracks the last 4-week change, that's 35 million ounces. But if you go back an extra 2 weeks to the longer term chart here on Nick Laird's site, you get an extra 15 million ounces. So it's actually about 50 million ounces in the last 6 weeks has completely come off the COMEX, not from registered from a futures trade to storing ineligible, but completely off of that COMEX exchange. What does that signify? It signifies that some private hands are taking that silver. Perhaps it's for industrial use and they were just storing it until they needed it. Maybe a manufacturer needed access to silver, and maybe it's private investment. And that private investor wanted to have that closer to them in their hands so they feel more comfortable it's there. Perhaps there's maybe not some confidence in the overall safety of silver on COMEX. I don't know. I don't want to start a rumor, but this has been a big redemption. In fact, it's been the biggest redemption, or I should say, rather, let's do it this way. It's been the lowest level of silver on the COMEX for about the last 5 to 6 months, until late August, September, as you see here. We haven't been down to that level. So the last 6 to 7 months, that change of silver the last 6, 7 months has come back off, but it's come back off in only 6 weeks. So look at it that way. In 6 weeks, they took off silver that took about 6 months to get on there. If that's another way to look at it. Another way to look at the total stocks, another little chart. Look at this 400 to about 350-ish million on this chart here. You can see most of it has come out of registered stocks, this dark green. That's why I really like this chart. You see it coming down from 400 down to about 375, but most of it's come off of the registered stocks and not the eligible. The eligible is pretty much held strong. So it means most of it's being delivered from the futures contracts and being taken off. Maybe it goes to eligible and being taken off, or just being taken off. And then a little bit additional has just been taken out of the eligible private storage. And again, you see that on a line chart. It's probably easier way to see that. The majority of taken off has come from this registered, this dark green line. So a lot of it, people are, we talk about shadow contracts or spot delivery contracts where you can come in same month on the COMEX, you stand for delivery in the same month, and then you take it off. That's really what's been happening here for the last 4 to 5 weeks on the COMEX. And again, you can see it on this chart. You look at the overall registered silver stocks, you can see the big fall there as well. So all these charts showing that we've had silver coming off. Why is silver coming off? I mentioned earlier, could be for industrial purposes or investment purposes. Well, we turn to SRS Rocco. I love this service, by the way. Go to his website, srsroccoreport.com. Lots of good information there on the precious metals. But this particular tweet, and I'm going to blow up this picture, this tweet that came out February 14th, 2021, he's talking about where the demand is. So for 2019, you see that there's been big total industry and investment demand. The investment demand is the gray or the silver. The industrial demand's a yellow. You can see the investment demand really ginning up based upon his data. Now, some of this is 2020 final, and some of this is 2021 a projection. So this 2021, this right-hand column is a projection. He's projecting it to go from 585 million ounces to 700 million ounces in investment demand. But we do know from 2019 to 2020, that went up from 131 to 585. So the overall biggest increase in total demand for silver in 2020 was towards investment demand. Now, we have seen similar reports out of the Silver Institute. So this seems to back up what the Silver Institute has said. And again, Metals Focus, Silver Institute are his, and World Silver Survey are his sources there. So he's using those mainstream sources. And what we're seeing is a lot more silver going into investment demand. That's where silver's price should begin to rise, because it's that marginal demand for silver, that increased investment demand for silver, which is going to cause that price to really rise over the long term. So then we start to get the report of where all the silver is coming from, where it's being redeemed from. Of course, we started talking about the COMEX and some of the ETFs, but there's a nice little post on Wall Street Silver here on Reddit, which is talking about some of the other places as well. So they've documented a lot coming off of the COMEX. So We're also going to talk about Shanghai. So they documented how 8.5 million ounces came off on Friday, March 18th out of the Shanghai, which is the China market as well. So it's not just the COMEX. And they've got some nice data here on how much on the 14, 15, 16, 17, 18 days silver delivery volume. I'll let you guys look that up. It's right here on Reddit Wall Street Silver. You can find it just by going to Reddit Wall Street Silver, and they've got more data in here. But we've seen it start to come off the Shanghai. They've got some other markets as well. So this is the one you want to go look at. Huge silver demand leading to shortages across the globe. Take a look for yourself. That was posted a day ago by Mountain Phoenix. If you go look on Wall Street Silver, he's got it from all over the world. We're just going to highlight a little bit of that. Of course, we started with Shanghai, and we're going to look at this overall Shanghai chart. Now, this comes from the SGE and SHFE, which are the official markets in China. You can see this dropping down from about 250 million ounces inventory to about 227 million ounces in about the same time frame. So starting really in about March and going through March, these three reports actually started late February. So February 26th, March 5th, March 12th, and March 19th. You see all of that silver really coming off the Shanghai as well. So it's not just the COMEX and the ETFs, it's coming off of the Chinese exchange. And that comes from this posting right here. So you can, that's right off of the main posting where he's got all of this information. So, but there is one specifically for the Shanghai, which goes into more detail here, which is linked off of this one. So again, just go to this article on Wall Street Silver, huge silver demand leading to shortages. You'll find it within the first page or so of Wall Street Silver on Reddit. We want to talk about US Mint Silver Eagle sales. So I talked about this about a week and a half ago, and we've got some updated data. So far in March, it's been 2.4 million ounces. In February, it's 3.1, and January is 4.775. Remember from my previous video, I highlighted that just between January and February of 2021, when compared year over year to January and February of 2020, we saw a 44% increase of American Silver Eagle sales. So again, let's restate that. From year over year, January through February, the first 2 months of the year of 2021, when compared with January and February 2020, we had a 44% increase year over year in American Silver Eagle demand. American Silver Eagle demand, because the American Silver Eagle is one of the most demanded silver 1 ounce silver coins of any silver coin between the government minted or the private minted. That is a good proxy for the overall silver demand here in the States or in North America, because I know a lot of North Americans will order that, whether it be in Mexico or Canada, and of course, overseas investment as well. When you see 44% increase for the first 2 months of 2021 over 2020, you know that there is renewed interest in silver as investment demand. So again, another confirming factor that we've got booming investment demand in silver market. And when that starts to come in, when that starts to ramp up, that is where you're going to see the adjustment in prices for silver. So this is very, very bullish for silver in 2021. Last little nugget I wanted to give you, and this is going to cover silver, gold, and platinum bars as well. The Royal Mint, this is from thismoney.co.uk. So this is the UK Royal Mint. Gold rush causes chaos for customers, charge thousands for out-of-stock bars and coins as it struggles to cope with unprecedented demand. So here, there is a newspaper in the UK saying that the Royal Mint in the UK has unprecedented demand. It says here it's had a surge in interest in its precious metals division. So that's both gold, silver, and also platinum. They reported delivery issues on out-of-stock items the customers have. One customer from Scotland bought 143,000 pounds worth of out-of-stock gold coins. So there's such demand that you're seeing a six-figure purchase of out-of-stock, okay? Not in stock, but out-of-stock items from the Royal Mint. And by the time the delivery is actually made, the price had fallen by a little bit, but they took delivery anyway, because long-term, they're probably very bullish. When you make an out-of-stock order for 143,000 pounds, that's quite a bit. So a lot of information here about how the Royal Mint has not been able to keep up with demand. I'll let you guys read this article, but essentially they've been criticized for not being able to get the actual bullion. Of course, they're selling full price with a nice little premium for their out of stock items. They've received flack for that, as a lot of the US ones have. But, you know, at the end of the day, that's what demand is, that people are paying those premiums over spot for the coins. That's what they feel like the coins and the bars are worth, and they're continuing to do it. And we're seeing more and more of that, in addition to, and this is on the retail side, in addition to the redemptions on the COMEX and the ETFs, in addition to what's coming out of the Shanghai, you can see here on the chart, in addition to what we're seeing In India, that's happening in India, in addition to what we're seeing in the US Silver Eagle sales, we're seeing it in the UK as well. So this is a worldwide phenomenon. The silver squeeze is not over, in my opinion, at least from the perspective of people buying the physical silver, which is what they're looking for. It hasn't caused the price of silver to moonshoot or to really go up a whole lot, although silver's been more resistant to downtrends in price than gold has. I do think it's predicting us to have a nice boost to the silver price in 2021. Now, the all important line there in silver is the $30 price level. If we can push past that price level and stay there for any length of time, you're in a new era of that bull market of silver. You're going to see it go very quickly from 30, 32 to 35. That $30 line is really the one that we want to look at, but with unprecedented physical demand, not only in the retail side, but in the professional investment side and the industrial side. That is just unprecedented demand right now for silver across the board. Now, I want to go back to my channel. Of course, you see here, my last 3 videos have been focused on gold. So I wanted to turn the attention a little bit more to silver, but I do believe that gold is in a major bull market. That's why I've made 3 straight videos on it. So we're going to turn to gold here, and we're going to turn to our sponsor for this video. It is Blue Lagoon. And the reason is because Blue Lagoon is a copper, a gold, and a silver producer, mostly gold, but they have nice, healthy amounts of silver as well, and also copper. And why copper is important, because copper, if you remember from a video I did last week, it's sitting at almost a 10-year high in price. It's between an 8 and 10-year high and priced at over $4 a pound. So copper is in a major bull market as well. So when you have a company that's got the precious metals of silver and gold that are in bull markets and copper, which is in a major bull market, that's a good thing. As you can see here from the title slide, their company presentation, they trade on the Frankfurt Stock Exchange under 7BL, on the Canadian Stock Exchange under BLLG, and on the OTCs you can access here in the US and BLAGF. Now, if you're a US-based investor and you use Charles Schwab or some of these other brokers, you can get access directly to the Canadian Stock Exchange and trade that Canadian ticker at no additional fee or at a very, very modest fee, and have more liquidity on the Canadian Stock Exchange. So don't let the fact that this is trading on the OTC stop you. You can get up here to the Canadian Stock Exchange or have the full volume and liquidity of that stock and trade it right off of that market. Most of the really big US brokers will allow you to do that. And that's the way I recommend doing it if you're going to trade a lot of these Canadian stocks. In any case, I'm just going to basically walk down the presentation. Those of you who have followed my channel for a while know that I've been bullish on Blue Lagoon for quite a while. I really do love this company. They are now a sponsor of ours as well. So I'm going to continue to talk about them. I'm going to extend the story from what we did last time. They have 15 known high-grade gold veins, 20 kilometers of geological strike, and they've increased their overall land position by almost 50% to over 18,000 hectares. We'll get to that in a moment. They are permitted to mine at 75,000 tons per year, meaning they don't have to go through the mining process. The previous company that owned this project, the people that owned it had got it through that process. They have 2 permits, an environmental permit and a mining permit. So they don't have to go through that approvals process. Really, all they have to do is develop the mine, and they expect to make a mining decision here late summer or early fall of this year, according to the CEO, Rana Big, in an interview here just a few short days ago. That is a very big thing. One of the sweet spots of getting into the mining sector, especially precious metals mining, is getting involved in a company before they make the mining decision. Then they build the mine, and then they start mining and start cash flowing. That's where you're going to get one of your biggest bumps in overall valuation for a company about 90% of the time. So it's as close to a sure thing without being a sure thing in the mining industry as you can get. So Blue Lagoon is really uniquely positioned in a really good spot on that Lassonde curve. And remember from my previous videos, Pierre Lassonde, gold and silver guru extraordinaire, mining extraordinaire, has that chart which shows you the sweet spots for getting into the mining space. Blue Lagoon is sitting right in the biggest sweet spot in Lassonde's curve. So it's a really, really, really good place to be. They have several different projects. I'm going to talk to you about that. 4 different projects. We're going to focus on 2 or 3 of them for this presentation. I wanted to get in their capital structure because for investors, you want to know how many shares they have. Now, when you're getting close to a mining decision, they're going to have to dilute some shares to get that mine built. That's just natural progression. So what you want to do is leading up to that, not be overly diluted. So we're going to look at how many shares they have fully diluted. They're sitting at 82 million when you consider their shares issued and outstanding options and warrants by the existing shareholders. Overall, that's not bad. 82 million for the position they're in, having permits, having 4 different projects, being really close to making a potential mine decision here in a few months. That's not a bad place to be from the share perspective. Cash on hand, 6 million Canadian, have less than 100,000 in debt, which is not bad at all. It means they have a lot of potential cash for operations. Overall, they capitalize at 40 million, which is not much when you consider the fact that there's over $60 million in this project already. I'll get to how much money has been spent by the previous operators of this project. So this is not a greenfield project. This is a brownfield. This is where a lot of development has been had. There's a lot of drilling. There's more drilling coming up. We'll talk about that in a moment. A lot of money spent on permitting that whole process. So you're not getting involved in a super early stage, which is one sweet spot. You're getting involved in the second sweet spot further on the Lassonde curve. That's somebody that's had work done, and they're getting closer to making that mine decision. So you're in a sweet spot there, but further along in mine development than some of the early stage explorers we have talked about. Of course, the CEO and director is Ron Big. I've interviewed him on my channel. A very good feeling about this gentleman. I've talked to him several times. He has a lot of experience, about 30 years of experience, bringing different companies into positive territory with returns. He's done some really big deals in the Canadian markets. They also have Bill Cronk as a chief geologist. He has 25 years experience as a geologist and manager of programs for precious and base metals deposits in Africa, Europe, North and South America. So he's been around, he knows the game, he knows how to get things to production, 25 years. So this is a serious team that they have here in place. Here are the projects. The Dome Mountain is the main one we're going to be talking about. They're all in British Columbia, which is a tier 1 district in Canada for mining. The district you're in is important. The management's important. The project's important. All of those things are important. 3 things are important. And Blue Lagoon has all 3 of those things. They also have the Big Onion porphyry copper. Again, copper, gold. Those porphyries are very important to getting gold and copper out in the market. Gold and copper are both in bull markets. Key to understand. And then there's the Pellaire gold project as well. That's the one that's not quite as far along as the others, but it's closer than a lot of people think. So a lot of optionality in terms of which projects they're going to bring to bear. They're going to do Dome Mountain first, but they have some others behind it. So this is not a single project company, and that's important. Long-term share price appreciation depends on having multiple projects that they can develop, and this company has them. That's key. They're not going to be basically only having one project looking for another. They've already got the other projects identified that have also had some work on them as well in a tier 1 mining district. Very important to understand that. Some facts about Dome Mountain. I'm going to make this a little bit bigger for you guys. It's only 50 minutes drive site to Smithers, British Columbia, which is important, which means it has infrastructure and it's easy to get people out there, mine workers out there and other people out there as well. They have over 18,000, almost 19,000 hectares. They've added almost 50% here recently. So the 90% of their land position has never been explored. But you're going to see on Dome Mountain where they have done exploration on one of these veins, and they got a bunch more veins identified that they need to explore. So just on Dome Mountain itself, you could see potentially a 15-time return on the over amount of potential resource. And again, that's just a projection based on the 15 veins. We'll have to see what they actually come up with. But then their overall land package, both at Dome Mountain and for the rest of their packages, 90% of that sits currently unexplored. So a lot of exploration upside in the company, which is always good to see. You never know where a company is going to go when they have that much of a land package and really good mining districts that they haven't explored. This company can continue to march up into being a mid-tier producer potentially one day. They're all high-grade gold and silver on the Dome Mountain. It's a mesothermal type gold deposit. 28 million the last 12 years on permitting, 40 million on mine development. That's where the 68 million comes in. So their market cap is only $40 million, but they've had $68 million in development. So they're not even valued at the development that they've had up until this point, much less the potential for the gold and silver and the copper that they have in the ground when they finish out their drilling and exploration. A lot of exploration potential there. I'm going to skip down here to the summary geology. On Dome Mountain, only the Boulder vein system is relatively explored and drilled to date. Minor exploration over 12 more veins. 15 vein systems in total have been identified. There you go. They've already got their next targets identified where they're going to do additional drilling, and they're going to do more drilling, as you'll see here in a moment as I read over one of their latest press releases. So they're not staying here with just the one vein. They're going to go drill out targets on these other veins, get more resource into the system, which as a shareholder is positive for you because of what it's going to do is it's going to raise the interest in the market and their overall price because they're going to have more ounces in the ground. They do have an NI 43-101 compliant report, which amounts to 70,418 ounces AU and 12.4 grams per ton AU. and 109,160 ounces of indicated at 8.3 grams per ton AU using a 3.42 grams per ton cutoff. Those are all good numbers. Take it from me. I've studied a lot of projects. Those are all very, very, very solid numbers in terms of grams per ton. When you're sitting at 12.4 grams per ton gold and 8.3 grams per ton gold, that's amazing. I've seen projects in the States make money at a half a gram per ton of gold. They're sitting at 12 and 8. Okay. And their cutoff is 3.42 grams per ton. So their cutoff is above what a lot of mines make a lot of money at. As far as I'm concerned, not an issue there, at least from my perspective on how I look at my gold companies. The main Boulder vein plus 15 high grade veins all in here in this part. This is the overall legend of what they're looking at, all these other little veins here. And look at this massive land package. I mean, they've got, they can just keep going with land package. So all of these veins that they can look at, here's the main vein that we're looking at right here. And they've got these others that they can explore. They're going to do some additional drilling. We'll talk about that in a moment. They're also doing soil sampling right now to help them figure out where they want to drill. So there's more here on the Dome Mountain Gold Mine if you want to look at it, where they get into the depth of where they're seeing the actual resource there. I'm going to let you guys look over that. Some of the other identified blue sky potential, there are other veins. I wanted to show you like the free gold vein, for example. Look at what they're finding there. 0.6 ounces per ton. Now, I'm not talking 0.6 grams per ton. We're talking 0.6 ounces. So you take grams and multiply it by 31, basically 31 and a half-ish, and you get ounces per ton. So this is half an ounce per ton. Remember, at half a gram per ton as a surface operation, you can make money. 3.2 ounces per ton, 1.8 ounces per ton. So they've got on the free gold vein, that next vein that they're looking at, some really good drill results. The 9800 zone Forks Hops vein has 76.2 grams per ton, 1809 grams per ton. Also comes with a free 29% zinc. Thank you very much. And a 14.7% lead. Nice throw-ins to the precious metals. Not bad at all. So again, some of these other veins have already been started to have exploration. You're seeing these really, really, really good drill results with some free base metals thrown in. Cannot, under any circumstance, ladies and gentlemen, complain about. There's nothing to complain about that. So they've got geophysical surveys and stuff done on as well. That's part of that 28 million, 40 million packages of exploration was done by the previous companies. More on that summary of facts on this slide. You can look at that. It was explored by Timmins Nickel Company and another company there that went and did a lot of this exploration. They have that data. They have a milling agreement, milling and profit share agreement with Gavin Mines and Nikola Mines. So Nikola controls their mill processing. So this company doesn't have to go build a mill. They can ship it over to this mill and have it done. That will save a lot of money. A lot of mines, especially in remote areas of the world, don't have a nearby mill, so they got to build it. And that can take anywhere from 60 to 150, $200 million. That's something right now that this company is not going to have to spend money on. So they're not going to have to just dilute 65 to $100 million worth of shares to get this running, because they have the nearby processing plant. And for just a relatively small fee on every ounce mined, they can get that process at an existing mill. And they're permitted to do 75,000 tons of rock per year. So as long as this mill can handle it, they can put it through, and they can get the gold and the silver and the lead and the zinc and the copper out without really having to build this big mill if they don't want to near Dome Mountain. Long-term profit share agreement for up to 40,000 tons per year. So they would need some additional milling capacity, get up to 75,000 tons. But you could do that by either adding to that mill or identifying another mill, or building a small mill on your property if you want. But the first 40,000 tons are already basically taken care of in this agreement. That's major. So they have the mine permit, they have the environmental permit, that's all done. They just got a few other things that they have to do for that Dome Mountain. Now I want to go and look at the second gold project. That is the Polaire Gold Project. And I'm just going to go over the fact sheet with you. They do have, again, another 43101 technical compliant report done in December 2019 by JDS Energy and Mining. They have 10 mineralized gold and silver bearing quartz veins identified, strike lengths anywhere from 100 to 300 meters, thickness from 0.3 to 7.7 meters. Those are all good numbers. Considerable quantity of stockpile mineralized rock on service, about 24,000 tons sitting in service that they can run without doing any additional work that was already done by previous operators. They're taking some samples there. Of the 24,000 tons of material remain to be tested and processes, but they're going to figure out how much gold and silver per ton is in there and how much they could use that to kind of project out how much some of the rest of that mine has. We're going to talk about Big Onion Porphyry Copper Project. It's gold copper project. It's 16 kilometers east of Smithers. Again, all of these within 50 kilometers of Smithers, easy to get to, have existing infrastructure. This is about 20-minute drive to the site. It also has a 43101 report from 2010 done by Guro Consultants Limited after they did a 21,000 meter drilling program. That's a nice little drilling program on this project. They're looking at 0.2% copper cutoff grade. And within that cutoff grade, they have 686 million pounds of copper at 0.32% and an inferred resource of additional 64 million pounds at 0.28%. There are a lot of blue sky potential there. You can see the map down here on the left. They've got a lot more exploration upside. So Blue Lagoon has a lot of stuff going for it. It's in Tier 1 mining district. It has really good management. They have a project up and ready to go here in a few months, they think, where they're going to make a mine decision here in a few months on the sweet spot of the Lassonde curve. They have additional projects already identified that they have in the pipeline so that they don't have to do it. So they're a multi-project potential producer here in the future. Those are all things that you want. And in addition, they kicked off a 20,000 meter drill program here in January, and they're going to be releasing news on that for the Dome Mountain Gold project. That is awesome because that's going to drive some additional news on this project. That's going to help create interest in the project, potentially raise the share price as well. So that is it, guys, for the presentation today. We wanted to update you on what's going on in the silver market. People are pulling silver off of the market. They're pulling it out of the COMEX. They're pulling it out of the Shanghai. They're pulling it out of the ETFs. They're pulling it out of Indian market. They're pulling it out of everywhere and taking physical possession of it. And we looked at the report from SRS Rocco, which showed us a lot of that is for investment demand. It's not all for industrial demand. Investment demand has really kicked up from 2019 to 2020. And everybody from the analysts to people like the Silver Institute, Metals Focus, and all of these organizations are predicting even increased more in 2021 silver demand. Then we turned our attention back to gold. We think the fundamentals of gold are really good. And I showed you a really good potential investment for you guys if you want to get into that gold space. Blue Lagoon, of course, they have a lot of silver there as well. And they have copper in what's a major copper bull market right now, about 7 to 8 year highest price in copper that we've seen on that market. So I think that potentially could be a really good option for you guys for your portfolio if you're interested. So I wanted to come back and do an update for them. We talked about them first a couple of months ago and also interviewed their CEO, Rana Big. Get a really good feeling about him and his experience in bringing companies into successful returns over the last 30 years. Of course, he's got a good geologist there as well that's done it all over the world and knows what they're doing. So that is potentially a really good option for you guys. Remember, they're sitting in the sweet spot of that Lassonde curve just a few months before potentially making that mine decision. And then remember, they don't have to actually build the mine to get it to 40,000 tons. So they're not going to have that initial share dilution that a lot of companies are. They can ramp up to 40,000 tons and then make a second decision. Do we want to expand that? Can we get that done with our existing contract with that third party miller, or do we build our own on site? And so they're going to get some production and some money out of it before having to then go to that decision about how they expand their operations. And that's just on Dome Mountain. They got the Polaire project, you got the Big Onion project, so they got more projects in the pipeline. Seems to tick a lot of the boxes. So if you guys are interested, please do your own due diligence. But I've looked at them several times now. I feel comfortable for myself, a company that I want to invest in. So wanted to bring that to you as well. This is going to wrap it up for today, guys. Thank you so much. This has been Rob Keens from goldsilverpros.com.